Good morning.
Oh, back.
Oh, come on, you can do better than that. Good morning. There you go. Or we say in Tennessee, howdy. Thank you all for coming. Must be Baptist. Everybody's in the back, so we'll have to talk it up for you. But thank you for coming. Today, we're going to be talking about from pitch to partnership. Our goals today are to pull back the curtains, if you will, on how to build patient-focused efforts and how it's viewed by the other side, which is your panelists today, your venture capitalists. We have a very diverse and talented panel. And with that, this is an opportunity for all serious innovators to learn how to enhance your entrepreneurial journey. So I'm Dave Adair, also known as Muggsy or No Hair Adair. I'll be your moderator, and we have a very talented pool of individuals here. So I will turn it over to them and let you guys introduce yourselves and tell a little bit about your firm.
All right. Hi, everyone. This is Zoe from EQT Group. I'm based in Hong Kong, and I lead our healthcare growth investing efforts across Asia. For those of you unfamiliar with EQT, we are a global investment firm with a long-term commitment in healthcare. So, across our healthcare investment program, it spans across early stage venture to late stage buyouts. And the early stage venture program is known as EQT Lifesciences in Europe, and we have a similar program in Asia. And then within healthcare, we invest across all the key subsectors, including medtech, biotech, diagnostics, digital health, and healthcare services, with a focus on companies solving real clinical or system-level problems.
Okay. All right.
Thank you. Irit Yaniv. I'm coming from Israel. I'm leading Almeda Ventures. This is an investment fund investing in medical device and digital health, taking clinical, regulatory, and pre-commercial risk.
And Evelyn.
Oh, hi, my name is Evelyn T, and I lead the medtech practice of LSI Lifesciences Consultants. It's a boutique life sciences consultancy that works with large strategic investors as well as large PE companies to conduct third-party market opportunity assessments and due diligences. We work across the medtech markets, and we specialize in interventional oncology, structural heart, cardiology, neurovascular, endovascular, orthopedics.
Did you miss anything? So I know we're supposed to talk about pitch to actually implementation, but let's level set a little bit about the pre-pitch, okay? Because this implies you've earned the right to pitch, right? So Evelyn, why don't you start? Give us a little background on some pre-pitch kind of thoughts that you have.
Yeah, of course, I think you really need to come prepared and do your homework. Come not just with your clinical data, with the clinical efficacy of the product, but also with market data, whether or not it's the market adoption potential, the pricing potential, etc. And then second, I think it's, everyone should be doing a lot of research on who you're pitching to. So know your audience, know what their past investment history looks like, and that will enable you to better anticipate the skepticism around your pitch. So what areas they're going to poke in your pitch, and what are the assumptions they're going to be questioning when it comes to the valuation of your company. Mm-hmm. And I think the third thing is about just making sure that your use case is crystal clear. If you look at the pitch competition yesterday, the winner, right, Billy SG, I thought the pitch, the reason partly why they won is because the use case was just so clear. So you could have a technology that could be a game changer, that could be, used across multiple areas, multiple therapeutic areas. But your initial pitch, if you have a really clear use case that really targets what you're trying to achieve, that is a much more compelling pitch than trying to capture so many parts of the market. That can be later on down the roadmap, but just being really clear about what your first use case should be.
So we have a special guest with us today. By popular demand, Josh, you want to introduce yourself and your firm? And we were just kind of level setting about the pre-pitch before you do the pitch. So you can add some comments.
Yes, so I'm Josh Berg. I'm the CIO and the founder of Berg Capital Markets. We are a mix of investors and professional services. Kindling Investment Partners is our wholly owned sub, and we invest in seed through Series A. We all healthcare subsectors except biotech, and we're also CFOs. We run M&A, and we raise capital. So, pleasure to be here, and thank you very much. What would you like me to talk about?
The question we kind of said, we were doing some level setting on the pre-pitch. How do you get to the pitch? So, Evelyn did a great job of talking about knowing your target audience, etc., looking at prior rounds, that kind of stuff. If you had anything to add, that'd be fine. If not, we'll move into the pitch.
Yeah, I mean, I sit on both sides of the table in terms of pitching. The one thing I would say, it's all the ostensible, obvious things in my view. It's know your audience. If you're going to be pitching as an entrepreneur, do as much homework as you can ahead of time on who you're going to be talking to and really, what they look for. The one thing I hear about time and time again, all these young companies, they do their work and the investor does their work and they say, okay, what's your background and what's your market and what's your product and what's your differentiation and the size and the product market fit and the valuation, and things get really technical very quickly. And what I've found, there's a massive disconnect when you're investing in early stage companies, pre-seed all the way through Series A, you're getting married to the investor and the investor is getting married to you. And some investors say, well, great, let's go out to dinner. I'll see how the entrepreneur treats the waiter. If they're nice, then I like them. I don't think that's enough. I think what I would recommend to people that have startups is go camping for the weekend, go skiing, go golfing. Take your, if you're the entrepreneur, go with your investor, and you haven't gotten married yet, but you are getting married, and it's just like a marriage. Discuss your value systems. Things are going to go wrong. There's no clear line up as a young company. You're going to get, you're going to have IP infringement. You're going to have employees that leave, key personnel that leaves. You're going to have competitive changes. You're going to have all these things, and go literally go camping for 2 or 3 days and get to know the person.
I like the analogy there, because the one thing in life that's constant is change. So things are going to change. So Zoe, we're still trying to level set this pre-pitch, but any thoughts from you or
Yeah, I think, as both Evelyn and Josh mentioned, knowing your audience is always a great starting point. I would just add that also the clarity of the ask and outcome, right? So you need to be clear about what you're looking for. Is it funding, feedback, partnership, or access, right? And be clear ahead of the meeting about what success looks like out of the meeting and some of the next steps you are hoping to trigger.
All right, do you have anything to add, or we?
In light of what Joe said, I always look at the first meeting in order to get to the second meeting. Okay, so I prepare for a pitch, thinking about, okay, what is going to be next. So I think in the pre-pitch period, what you have to think is how to get the interest of my audience in such a way that I will get a second chance. And not a no, thank you, we will call you, but a different way. So in light of, do skiing or whatever, do whatever you can in order to get the second meeting, because the second meeting is the important one in my eyes.
So I'm hearing know your audience, preparation, because the other audience is preparing and they know their target, right? And then once you kind of get that, you kind of meddle that with going camping. So we'll pull that one. So with that,
All thing or skiing or whatever you want.
Can we use that one? That's not trademarked or anything, going camping. Okay, so let's change gears just for a second. Okay, this is going to go to Zoe and to Josh. Who or what determines how you get the pitch? Okay, 1 or 2 minutes, just kind of give some tidbits on what goes through that process. And being a gentleman, we'll start with Zoe.
So from our side, what determines who gets the opportunity to pitch often comes down to two things. First and then foremost is always strategic fit. From very early on in the interaction, we always ask, does it align? Does it align with our focused themes? Is it the right stage for us to come in? For example, for our Asian growth program, we tend to invest after Series B in the clinical stage of a company. And then is the technology or product differentiated? Is the market big enough? And lastly, is it something that we believe that can scale in a way EQT can uniquely support? And then secondly, I would say it's the warm introductions always help. So if a founder is referred to us by somebody we've worked with, whether a co-investor, advisor, portfolio company, that's a strong signal. We tend to get a lot of inbounds, so filters do matter.
So familiarity, again, I'm hearing this echo of knowing your audience and being prepared. Josh, do you have anything to add to that in terms of your shop, how you've all determined who gets a pitch?
No, well, a little. I mean, that was really well said. I mean, look, investors have customers as well. We have limited partners, and those limited partners dictate your mandate. So it's all about fit in the beginning. So, we get, hundreds and hundreds of emails, every week from companies. And the first thing, quite frankly, is just, it's very simple. It's third grade stuff. Is it a fit? Is it a fit or not? We're a pretty broad firm. We look at a lot of things. We have a lot of flexibility. So a lot of times it's a fit, but I have a lot of investor friends and they have more narrow mandates, and it's just a simple screening process, a filtering process. So fit is the name of the game at stage one.
Yeah. So there are no fast yeses. A forever maybe will kill you, and a quick no is a good friend. So when you're going through that process,
absolutely.
So don't take that as an offense or affront.
Yeah. A good no is one of the best things to ever happen. It saves everyone a lot of time.
So switching gears a little bit, okay, this is Evelyn, all right. We'll start with you. We'll go to right afterwards. If you would tell us, what do you look for? You've got the pitch. What are you looking for in that pitch? If you take a couple minutes apiece and share that with us.
Yeah, so of course, it has to start with a clear unmet need. So they're looking if the technology or device is able to address a significant pain point for a patient or physician, or are we talking about technology or device that enables greater access to a broader part of the population? But the unmet need alone is not enough. They're also looking for just clear business opportunity. So is the patient size large enough to justify an investment? Will hospitals and physicians actually switch to your product? Is the product going to be filed under the existing code, or are we going to talk about a entirely new code in order to justify the cost of using their product? It could also be looking at, how does the product work and go into the workflow? Is it going to require training of the physicians to use it? It's going to require behavioral change of the patients in order to want to accept the therapy. Is it going to require a huge capital investment? And if you're talking about a large strategic investor, they're also going to be looking a lot at strategic fit, right? And sometimes that could be in terms of, will this product, do they have to have an entirely new sales force to sell this product, or can they just add this product to the current basket of goods? And a lot of strategics now, they're not just looking at your particular company. They're going to see how the company fits into the entire patient journey. So they're really interested in connecting the dots from the point of diagnosis to a point of therapy, and then the reintervention, post-intervention care. And so they're looking at how that particular investment fits into the entire patient continuum.
Sorry.
Yeah, I would like to add something else. I mean, those are the points that we are looking in the content, but there is something else on top of the content is the relationship between the team. So when someone is pitching me or a company is pitching me, I would like to see the team that is pitching me. Who are the people that are speaking with me? It's not only the CEO, it might be the CTO, it might be the founder. The relationship while they are speaking, who is saying what, how they act to each other. So there are a lot of soft issues during the pitch that I would like to see. And this is why I prefer to meet those that fit in person and not by Zoom, because this makes a lot of difference between the teams.
Yeah, absolutely.
So chemistry, okay. Back to basic science.
Yes, chemistry.
Well, you did such a good job on it. I'm going to put you and Zoe on the spot this time. We'll start with you again. What is your process? Once you go through the pitch, what's the process, a timeline to get to a partnership? Because remember, we're pitched to partnership. So if you would start us off, go ahead. You did a good job on the last one. So start us off, and then we'll go to Zoe.
Zoe, it's you.
No, it's you.
It's you.
Oh, it's me? Oh.
You're on the hot seat. You're the hot potato right now.
Sorry. So pitch is first, and hopefully you get the second chance, as I said before. And then we are starting the due diligence. Due diligence include going into the details on everything that you presented to us, starting from the unmet need, speaking with KOLs and physicians, and working together to verify and validate each of the points that was mentioned during the presentation. And then we start with the financial and the business model, validate, verify it, make sure that we know exactly what and where we are stepping into. One of the things in early stage investment is to try and predict the future. So how much money the company will need, who are going to be the investor, because usually we are not going to fund the company on all those steps. And once we realize and have a clear plan, we can go to our investment committee and try to get an agreement on the terms, and then discuss with the partner the terms and try to get into agreement with the partner. And once this achieved, we can go back to the investment committee and get the deal done.
Okay, Zoe?
Our process is very structured but founder-friendly. So typically it starts with a short conversation or call or meeting with the team for us to understand the business and the team. If there's a mutual interest, then we would move to the next stage of a more focused diligence, looking to the clinical, technical profile, fundamentals, the IP, the regulatory or commercial pathway, the product market fit, etc. One aspect which we value a lot in our process, I was mentioning, is that from very early on, we tend to involve working with, we refer to as industrial advisors. So these are highly experienced professionals with deep domain knowledge that can support us in evaluation of a certain aspect of a target. For example, it could be clinicians who tend to be the end users of a particular product, regulatory or manufacturing experts, clinical experts, or strategics who tend to be could be the ultimate buyer of a technology. So we tend to involve them very early on in the process to support us in the technical and commercial diligence. And in most cases, what we often find is that they are incredibly useful to the company, to the founder's benefit in the post-investment value creation phase, through strategic insights, operational guidance, or network access. So that's how we typically what the process looks like, and of course, being a large part of a international organization, we would also look at how does the target fit into the broader portfolio of the EQT healthcare portfolio, and how we can leverage some of our global resources.
So all this can be accomplished in about 24 hours. Is what the entrepreneur thinks and hears, right? But I know you think we're only working on one deal at a time, right? But we're working on multiple pitches, multiple phases. So it takes time. And so after doing a pitch, don't send an email the next day and say, okay, what's the term sheet? So, right? There's a lot of work that goes into this. And both of you kind of touched on something that I think founders are sensitive about. How do you get a pre-money, and how do you come up with that? It's not a special calculus, right? You said very clearly you see the future.
I try.
The crystal ball, right? You see the exit. You have to visualize the end and work backwards. So it's not very precise or complicated, right? But that math is just working backwards. Okay. So let's switch gears over now and say, how do you visualize the partnership? Okay, we've done all this incredible work, probably 90 days or so, particularly if you're going to lead, because you have to get patents and all that. I don't think I heard that piece of it, but that takes lawyers, which like to charge more by the hour, right? So it takes time. But you're ready to lead with a term sheet and you make a decision. So Zoe and Josh, on that one, how do you visualize that final, you're at the victory line or, lap or whatever you want to call it? What do you see? Give me a couple minutes from each of you, and we'll start with Josh this time.
Yeah, thank you. So it's not a one size fits all, but it definitely, I agree with you. It's probably 90 to 120 days. And if you arrive at the finish line or the 90-yard line and you want to get to a term sheet, the unbinding term sheet initially that we would submit or would be submitted, what we found is very helpful is we'll have a verbal conversation ahead of time prior to submitting, and we'll say, look, we're thinking about the following. Would this be a fit for you? We get various answers back. If we do submit a term sheet, and we work collaboratively with our potential investments, lockup is the lockup period is really important. So, every young company has a cash balance and has a certain burn rate and a certain runway, and you want to. If I'm an entrepreneur, you want to find investors that are cognizant of that and that are benevolent to that dynamic. As an investor, you also want to be cognizant of the company. But when you submit an unbinding term sheet, that is potentially binding, and you say, look, I'm going to do 30 days or 45 days or 60 days of final due diligence with KOLs and stakeholders and et cetera. It's very important on both sides of the table to be aware of the company's resources and constraints, because you don't want to leave. I've seen this movie before where the company's going to run out of money in 3 months. The potential investor submits the term sheet. They lock them up for 60 days. They leave them out. They say they're going to get married. They do their due diligence. They talk to a couple KOLs and they don't like it for whatever reason, and they pass. All of a sudden, the company is sitting there with 2 weeks of cash and no investors, and they've locked them up. And by lockup, as people may know, you're not allowed to speak with other investors. So I think it's really important to, as an investor and an entrepreneur, be aware of that and be friendly to the entrepreneur. Don't just be like, hey, our firm is the only thing that matters, and we don't care, if we leave you out the altar and you've got 2 weeks of cash, and go pound sand and do a down round and get crammed down in dilution. And that's not fair or nice.
Sounds like a bad marriage.
Yeah, I mean,
not even a start of a
my advice and my whole thing is it both sides of the table should be aware and benevolent to that dynamic.
Right. So open and communicative between the two.
Yeah.
Zoe, you want to add anything to that?
I will say that for us, usually after the term sheet, it's this confirmatory diligence phase, but really the heavy lifting is before that, before the term sheet. And after the term sheet, as long as there's no red flags identified in some of the standard diligence work streams, including legal, finance, background, etc., we would, typically I would say over 90% of the chances proceed with that investment. But one key aspect in the confirmatory diligence that we care a lot about is IP diligence, because essentially we invest in technology. We want to make sure that it's absolutely in a great shape, when we're especially talking about Asia for global technologies.
That's the moat, and that's good. So we got about 5 minutes, I think. So we'll
2 minutes.
2 minutes. They're saying, oh boy, okay. Well, I was checking the phone there. Why don't we do this? We'll just go down. Start with Evelyn. Take 30 seconds. Tell us some favorite story, memory, or any other parting shot that you've done in this pitch to partnership in your experience.
All right, I'll try to keep it at 30 seconds. So we were working with this Chinese company, and they were about to do a global launch of their product, starting in the US and China. And so it was supposed to be a next generation product. It was a drug delivery device combination. So it prevents the patient from having to go to an IV center to get the drip for the product. And so they could self-administer it at home. So they thought they had a big breakthrough, right? And now they can access a much wider part of the population, especially in America, because there's a huge convenience independent factor to it. But that's when things got interesting, because when they tested out the product in China, it just fell flat. It turns out patients actually like going to the clinical setting. They like going to the hospital. They like going to an infusion center to get the product. And so, what turns out to be a great play in America is actually perceived very differently once you go to a different market. And so I think the story there is that, you could have a great global value proposition, but make sure that you're really understanding the market that you're trying to enter. And not just in terms of patient numbers or reimbursement codes, you're actually going to have to understand, what really drives behavior change, when it comes to therapies and treatments, because
knowing that audience again, right?
Yeah, knowing your audience, in this case, patient audience, right? Because good healthcare actually has a different meaning to different people in different regions.
All right. You want to comment?
Yeah, just a quick story about a pitch that led to partnership. Actually, a failed pitch, because the guy that came to pitch forgot his presentation. So he had to pitch, just spoken about the product and from his bottom of his heart. And this was so hearty and so touchy that we decided to continue. And at the end of the story, it ends up with a partnership.
Okay. Well, I'm going to have to cut it off because we're out of time. But in summary, first I want to thank the panelists, incredible talents. Let's clap for them. Yeah. Know your audience, do your homework, and realize timelines. It does take time to do this. Any quick parting shots? Josh, 5 seconds.
A friend of mine did no marketing. He received $100 million at a $400 million pre-money because he's got an AI company and he was connected with the Silicon Valley crowd. And so if you can get that dinner, go for it.
Speaking of dinner, we have lunch coming out there. We're standing in the way of them getting lunch. But Zoe, any last parting shot?
5 seconds.
Yeah, well,
Be
we've
bold
been living with
and
time.
but be clear. Vision without clarity doesn't travel far.
Yep. Thank you all for attending today. We appreciate you so much. Thank you.
Thank you.
Thank you.